Welcome traders, this is daily analytical report with Alpari, and my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis. We are seeing a bit stronger dollar right now. Probably the new meant to be Secretary of State, Mr. Mnuchin, is not very happy with that, as for the past few days he was saying that American dollars is too strong, but on many instruments that strength of American dollar stopped on crucial supports. I will show you that later when we will go through the technical part. From the fundamental point of view, we had Dow Jones crossing 20,000 points for the first time in the history, which caused global optimism. It is also obviously driven by Mr. Donald Trump, new President of the United States, and his expected stimulus package for the economy. So actually traders, they do believe in that. So far so good. They are expecting a huge stimulus from the new president. That is why stocks are going higher, surging. It's a huge upswing on almost all global stocks. I can show you the calendar right now. Also, we had important data from Britain. Important data for British pound. We had GDP, gross domestic product from UK, which came better than expected, but failed to lift British pound and on many, not only on cable but also on other crosses. When speaking about UK, when speaking about Britain, we have to mention that we got new information about Brexit. So UK Parliament will hold the first debate on Article 50 bill on Tuesday. What is more, the Brexit process is about to trigger Article 50. It's expected to be presented to Parliament on Thursday, and UK House of Commons to hold final Article 50 vote on 8th of February. Right after debates, the bill will go to the House of Lords. So that more or less time frame of the Brexit situation in British Parliament and House of Commons, House of Lords, and about triggering Article 50. Still to come, pack of data from United States, as always, initial jobless claims, as always on Thursday, but also pack of data from housing market and PMIs, markets, PMI composite, market service PMI. It shouldn't be so influential, as always. Yesterday you had the data for oil market, EIA crude oil stocks change, which came higher than expected, so we have a build up here. No major swings on oil. We are still closed in a side trend that I will show you once I will start the technical analysis. As for tomorrow, what do we have as a GDP from United States, which will be influential for the market. Time to go to the charts. Maybe British pound to American dollar first. So the cable. On cable, what do we have here is a downswing for today. This is hourly chart, and on hourly chart you can see that we are almost on lows of the day, but we are still in an uptrend, right? This uptrend started in the middle of January, had two corrections so far. We had this one for 3 days, we had this one which lasted 1 day, 2 days ago, and we're having the third one. The potential support for this correction is either a trend line or the horizontal support here. So far so good. This decline is not big. It was 87 pips. For the cable, this is really nothing, as cable is rather a volatile instrument. So the sentiment on cable is definitely bullish. We can see that even this local downswing is being protected right now. To the closest support, we do have, to the closest horizontal support, we do have 40 pips. To the trend line, we do have 20 pips. So the sentiment here is bullish, still bullish, and traders should be looking for opening long positions. On British pound to Canadian dollar, we are still waiting for a breakout of this line connecting recent lower highs. In the meantime, we created a pennant. I will highlight it with the same color. So we do have a pennant. Pennant is a trend continuation pattern. The trend here is bullish. Trend continuation pattern below a resistance is rather a signal for a breakout. It looks like they are just waiting for a proper situation, for maybe a trigger. There's not a big willingness to sell right now, and it looks like buyers, they do control this situation right now. So from the technical point of view, trend continuation pattern below resistance is signal for a breakout, and here traders should be looking for a breakout opportunity. Obviously, you can go both ways as your trader, so you can as easily sell as buy, and pending orders like that. You can protect yourself in case there will be a bearish breakout. With this kind of pending orders, you can do just fine on the market. Another instrument I would like to show you is Euro to Australian dollar, which was having this false breakout here, and then the price advanced higher. Unfortunately for buyers, the upswing from yesterday, which we can see here, which went above the neckline and also above the horizontal midterm support, was can be considered now as a false breakout, and now the price is advancing lower. I don't usually go on such a low time frames, but I would like to show you how this situation is mixed. So it's rather a side trend than the proper movement for long-term investors, because even if that is considered as a false breakout, false bullish breakout, the initial reaction after this movement should be much stronger, and it's not. So traders are still kind of locked inside of a side trend, and they cannot decide which side they want to go. This false breakout labeled with yellow color is for me more relevant than this one labeled with blue frame. So in my opinion, buy signal is still on the table, and the price should aim higher. When talking about euro, we have to mention euro dollar, obviously. Maybe like that. Because on euro dollar, what do we have here is a channel up formation, which started at the beginning of the year, actually. We are respecting the trend line, black. We are respecting horizontal supports, first one here and second one here. And here is the time to test the horizontal support again. It was a resistance. Here, 17th of January, after the breakout, it was a support once, twice, and we're testing this level as a closest support. And even if this support will be broken, which is probable and obviously possible, as everything on the market is possible, but if this support will be broken, it won't be instantly a sell signal. Why is that? Because price still will be above the trend line, and breaking this trend line will be the only sell signal trigger for the sell signal I can see on this chart right now. Even breaking this horizontal support located on 1.0710 won't be a sell signal itself, only breaking the black line. To the black line we do have 26 pips. In my opinion, sentiment on gold, on euro dollar is bullish. We are above important supports. The price, well, some may see a rectangle here, maybe a pennant. Some may see a head and shoulder formation here, left shoulder, head, and the right shoulder. In my opinion, it's more a trend continuation pattern. And according to the technical analysis, if you're in an uptrend and you're staying above supports, you should go only long. That's what professional traders do. They stick to the trend and they use lower prices in the uptrend to open positions with better prices. That's what they do. When speaking about euro, we had euro Australian dollar, euro American dollar. Now time for euro to Canadian dollar. I was talking about this instrument on our short market review, so a trading sniper, where we spotted this good trading opportunity. So a shooting star 4 days ago on Monday, shooting star bouncing from the horizontal resistance here. Then we had a follow-up, 2 bearish days in a row. On hourly chart, you can clearly see where are the local supports and resistances, right? So the local resistance was the previous support from the second half of January, and most probably we're gonna test this level soon. We are now approaching this level. This line I wrote an hour ago when I was recording trading sniper video, and you can see that we are now approaching this resistance. From the technical point of view, we should expect a breakout, not a breakout, but a bounce from this level for the price to make lower lows and lower highs. The price is approaching horizontal. After the bounce, the price should approach the horizontal support here created by highs from 12th of January, 13th of January, and so on and so forth. So in my opinion, scenario here on this instrument is short-term upswing and mid-term downswing. That's my opinion on euro to Canadian dollar. Now gold. Again, on gold we are bullish. You probably heard that like 1,000 times, but anyway, what's happening right now? Gold bounced exactly from this resistance highlighted by us, which was created by 38.2 Fibonacci level retracement from the main downtrend and also from the correction equality movements, right? So those blue frames are the same. Price at first, I was telling you that the price creates ascending triangle here and we should have a breakout. Okay, fair enough. Instead of a bullish breakout, we had a bearish breakout, so it looks more now like a head and shoulder formation, left shoulder, head, right shoulder, or double top formation. Anyway, we broke short-term trend line, mid-term trend line, and actually now the situation is not very good for the buyers. What is happening here? Well, we do have a stronger dollar, as you could see. for the last few hours, maybe 2 days, and along with much stronger stocks. So again, gold is a safe haven asset. If stocks are going up, gold is going down. That's the correlation here. Also, stronger dollar means cheaper gold. So we do have this downswing caused by correlations, and we should look for the closest support right now. So where is the closest support? We can measure how big can be the correction of this upswing. So we put Fibonacci's there with red lines, and we can see that 38.2% Fibonacci level retracement, 38.2 retracement of this upswing is on the same line as 23.6 of this downswing, right? So here we have a black line with 23.6, as you can see here on the right, and 38.2. So this is our closest support for gold, and I think that we should see some reaction here. We should see a bounce here. But anyway, sentiment on gold is bearish. It was bullish, but now with this bounce and breakout of those two trend lines is bearish. Australian dollar to American dollar, our favorite for the last few days. 1, 2, 3, 4, 5, 6. Almost the same movement. The last one was a bit too big, but it was 80 pips instead of 70, so not a big change. So what we are having here is maybe another same correction in a row, aiming strong horizontal support on 0.752. Is this support important? Well, in my opinion, it is. Support after the breakout, resistance, breakout, support. Even if we are below the trend line here, because we are, the sentiment, in my opinion, is still bullish. Also, let me draw you Fibonacci's. We didn't even retrace 23.6% Fibonacci of the latest upswing, so we cannot move, we cannot even think about retracement. So far, it's just a normal correction, which happens all the time. Another instrument is New Zealand dollar to American dollar, which finally touched this line, and we are telling about the possibility of contact with this line for the last few days when the price was somewhere here, right? When the price was inside of this ascending triangle. Ascending triangle on gold didn't work out, but here did. So since Monday, we are advising traders about the possibility of an upswing here, and that's what's happened. 110 pips. We touched the first important resistance created by this line connecting recent lower highs, and it's the place where we have a retracement, right? So it goes as the technical analysis says it should go. The closest support is here, and most probably we'll have a contact here. So if you're a short-term trader, scalper, 20 pips trade seems like a good idea. Here, sentiment is still bullish as long as we stay above the green line, above the horizontal support, and above the red line. We should be aiming higher here on the chart of New Zealand dollar to American dollar, on the chart of Kiwi. American dollar to Canadian dollar is having a bit of a roller coaster. As you can see, this maybe on hourly chart, it will be better. This upswing from the previous week, that was 18th, that was Wednesday, was retraced almost immediately on Tuesday. Well, not immediately, but entirely, right? And the price is aiming the horizontal support again. Is this horizontal support important? Well, in my opinion, it is. That is why this idea for a pending order is still here, because once the support will be broken, that will mean a bearish trend, which wouldn't be a surprise if we look here. Downtrend flag. If we will see a breakout, movement to this level will be very, very probable, almost 500 pips. Makes it a very interesting trading opportunity. American dollar to Swiss franc. What they have for you? Recently, we have a new mid-term downswing, because in the long term, this situation is bullish, and the price making higher highs and higher lows. We are approaching, actually we touched this long-term support. Okay, let's draw it like that, so it's not a coincidence that we stop right now. But on hourly chart, if we look at the recent price swings, we can see that it's not a reversal pattern. This is flag. Flag is a trend continuation pattern. So we could be expecting upswing. A bearish breakout here, right? We are still below a trend line. Here and here, below a short-term, mid-term downtrend line. Mid-term trend is rather clear and is stopped by nice trend continuation patterns. So, in my opinion, again, pending order somewhere here does not seems like a bad idea at all. I would even say that it seems like an excellent idea, and I will think about this position with about the possibility of a trade on my live trading account that I'm running for Alpari, where we have a trades. I'm showing those trades on live seminars that we are having across the globe. So, American dollar to Swiss franc, to wrap that up. What do we have here? Midterm downtrend. We are below the trend line. We're having a trend continuation pattern above a horizontal support. We don't see any retracement on the support, so putting all that together gives us a buy sell opportunity. Also, look at that. Look where we are on a psychological support of a parity between American dollar and Swiss franc, and we are slightly below that. So now Swiss franc is stronger, is worth more than American dollar. Also, I would like to change accounts, if you don't mind, to show you Brent oil on a H1 chart would be better, because for the last few days, no movements at all, right? It started on Friday, Monday, Tuesday, Wednesday, Thursday. The volatility is very low, so we are stuck either in a pennant highlighted with red lines, or inside of a head and shoulder formation highlighted with the yellow rectangles. Again, you are traders and you shouldn't have a clear approach of what the situation will be. You're traders and you can use it in your favor. You can use the fact that you can go both ways. You can easily sell, you can easily go sell as go long. And on both movements you can earn money. Most of the retail traders, they focus on one side and they try to convince themselves and even their friends, etc. They try to convince everybody on forex forums, on forex boards. They try to convince that they are right, and soon the price will reverse. There's no point for that. You should trade what the price is telling you. Price is giving signals. The job of a trader is just to read those signals, then execute good trades flawlessly with respect to money management and risk management rules. That's the job of a trader. It's not your job to predict if the price will go up or down. Your job is to react on those movements, right? That's a big misunderstanding that many traders, many retail traders have, and this is one of the key points of price action type of trading, price action analysis, that price action traders, they do focus on what the price is telling them. They are trying to find some hints on the chart that will help them to estimate the direction, and they are not focusing on one side of the market. They are not trying to convince everybody that the price will go up even if it's going down. If a price action trader sees that the price is going down, he's going long. If the price action trader sees that the price is going up, he's going up. He's always going with the trend. And here on oil, the trend so far is not developed. In theory, as long as we stay above the horizontal support highlighted here with a green color, so 53.8, as long as we stay above this level, the sentiment here is positive, so you should be looking for bounces from support. But again, what we have here is a head and shoulder pattern, and there's a probability that we'll have a breakout here. So odds are more or less even. Don't enter the market when odds are even, because it's a lottery. What a trader should do is to look for the trades with the highest probability, right? So now you open the chart of oil and it's 50-50. You can do that with any chart. You can open and it's 50-50, but once you do a proper analysis and you find proper trading signals, you add one to another, and finally you have like 5 bearish factors and no bullish factors, then you can open the position. That's what traders should be doing. Let me show you the buying panic on the market. An example of a DAX. So what do we have here? Side trend, upswing. Side trend, 2 false breakouts, upswing. It's all fueled, it's all driven by Donald Trump. Well, actually by expectations that Donald Trump will boost the American economy. That's quite interesting, right? Because media are telling us that he's the worst guy ever walking on earth, that he won't do anything, that he's a disaster, etc. But traders seems like an intelligent people and smart people, and they actually do believe that his presidency will help. So that's pretty weird. Somebody's lying here. Somebody's lying. Maybe he's not that bad as everybody thinks, or traders are simply wrong and they will suffer from this optimism. But actually, it's not my opinion. It's a general opinion of the people who analyze the markets, that first year of his presidency, or first and second year of his presidency, can bring a recession on the markets. In other words, maybe like that. First year of anybody presidency. So even if Hillary Clinton would win, markets would expect a decline here. At least some of the experts. Because after double presidency, which happened in the United States again, we almost always had recessions after double presidency. Also, this bull market that happened recently and recovery in United States is not magic recovery. It's fueled by debt. If you can see the debt to GDP in United States, it went up from 60 to over 100% during Obama's presidency. So it's not a magic recovery. It's a recovery fueled by debt, and at some point it will end, right? And there are high chances that first 2 years of Trump's presidency will bring us recession. That's the view of some experts. Guys, thank you very much for watching our webinar. Remember that trading and investment in financial markets involves an element of risk. And also do follow us on Twitter and our website talpari.news. And now we'll have a short break, and after that a webinar about technical analysis. Thanks very much and bye.